Hello everyone, hope you're doing well. Welcome to a quick market update video. It's been a while. As you know, Technical Roundup is off for August. Don has decided not only to buy the bottom, but also to go traveling with his new girlfriend and have the time of his life. I'm not salty at all, but while he's away, I thought I should hold fort on the channel, especially as we enter some pretty important structural areas and kind of just give an update on the pulse of the market in general. So if we start from BTC, it's been very sort of slow, grindy, and disappointing. I think there was an expectation that there's a very clear level to level trade from 20k to 30k. As you'll recall, if we hop to a spot market, 20k is the good old previous cycles level you've heard about so much on this channel and others, and then 30k is the breakdown point where a lot of the momentum started, right? And so you've got support, high time frame, resistance, high time frame. The expectation was a move from one to the other. It's on its way, but it's very grindy, very slow, and the market just doesn't seem to care about Bitcoin. Its relative to performance to ETH hasn't been great. Even just eyeing the watch list, a lot of the rotations have been in altcoins. ETH led the breakout, continued the breakout, and since then it's been ETH plus ETH proxy plays, and more recently a bit of a more degenerate skew towards dog coins and other things. But Bitcoin is very much in the periphery of the market, which in general isn't great. My kind of base case is that trends which form without Bitcoin being part of them tend to be very limited in lifespan. This time could be different. Perhaps there's a world in which Bitcoin catches up and takes over or whatever else. But in general, I think as a base case, it's worth remaining skeptical when you have crypto trends where Bitcoin is not a participant. Now, again, maybe that's changed and maybe there's some structural shifts going on at the moment, but I think more evidence is needed for that. And in general, as I've said, it's worth keeping an eye on the market and being a bit extra cautious when Bitcoin isn't showing much strength, or at least is lagging behind the stuff that is showing strength. Structurally, again, levels are the same, at least on the weekly. 20k support, 30k resistance. As you'll recall, our good old moving average memes are very much aligned around that 30k handle. So in terms of a larger reversion, that's the level that makes sense and when there's a lot of overlap and confluence. In terms of the market right now on slightly lower timeframes, as you'll recall, we spoke at length about this 200-week moving average, which I will bring up in a moment. Here's my messy spot chart. But if we just look at the 200-week moving average here, you can kind of see that below it, closed above, tested as support, and we're above it now, which is quite good, right? At least it's not bearish. I'd say the lack of momentum sucks, and the lack of willingness to buy this thing from like almost an order flow perspective isn't great. But purely structurally in terms of levels, 20k held. It is a short-term uptrend, and the 200-week moving average, which was previously resistance, is acting as support. So perhaps we're all just being a bit impatient. But on a weekly time frame, there aren't huge red flags in terms of closes through structure yet. It's really when you look down on the slightly lower time frames where this dragginess is most evident. You know, on the daily chart, you can kind of see how spiky this whole rally has been, and it just feels like the market's being dragged up unwillingly alongside ETH as that thing continues to show great strength. I think you can see that just by eye testing and seeing how often the market will just spike and pull back, right? You can see pretty much at every single swing high, it's been very much the case that you don't get those impulsive type of breakouts where the sellers get soaked. Instead, it's a spike back into the range, spike back into the range. While yes, overall climbing higher, there's just a lot of supply and profit taking, it seems, on the Bitcoin front, right? And we want to see a shift in that type of behavior where breakouts stick and we get some big-bodied green candles as opposed to Wick City at 25k. So that would be important. I think in terms of structural levels, as we've discussed before, as long as the market remains above the range high at 21 to 22k, this previous breakout point, that's fine. It's just it'd be nice if momentum picked up a little bit and showed some strength. I think part of the reason for this is, as I said earlier, that much of this move is very much ETH driven, so that's where a lot of attention has come from. But also, one way that participants have been taking profit on their ETH positions is by selling BTC, right? And you can see some evidence of that in the ETH BTC pair as well, which we'll come to. But yeah, in general, Bitcoin's not been the focus or the name of the game. Kind of slow, still above the levels that matter, but you know, I think in these types of conditions, if you're looking for what to trade the stuff that's strong, not the stuff that you think is going to catch up. And that's true for crypto in general, right? Especially if we're in the current environment where I think rotations in general will be a lot more cerebral, for lack of a better term. So yeah, that's BTC. Fine. Just want to see some momentum pick up. Levels remain the same. Short term, 22, 23K is the breakout point, which is structurally important. 30K-ish is the larger reversion target. And I want to see a shift in behavior in the form of these moving from wick city to breakout city. You can see just how unpleasant this has been overall. So keep an eye on that. Ideally, best case scenario would be Bitcoin playing catch up properly, and the whole market therefore looks a bit more decent. But for the time being, that's definitely not what the market is focused on. And there's further empirical evidence of this, because we know that, for example, on some days, quite a few days actually, the 24-hour volume on perpetual swaps has been higher in ETH than BTC. We've also seen that ETH options have a larger open interest than Bitcoin options, and that's obviously with the merge. But a lot of the speculation is focused around ETH, as mentioned. Let's look at ETH in that case and see what we're left with. Not much to say on the monthly time frame. I think if Don were here, he'd point out that monthly resistance is closer to 2200, suggesting that there's more upside to be had on this rally. Not an unreasonable view whatsoever, so we'll keep tabs on that. We know it's kind of 2K plus. I think the weekly time frame has the clearest structures. The first is that the market closed at resistance, and that resistance is this prior range high turned range low at 1800 to 1900, and that does have some overlap with the 2K round number. As you can see, the weekly close was right on top of the level, and the market has pulled back a bit since then. So in terms of your very short-term trading ranges, you've got resistance at 1900 and support in the 1800 area-ish, and we know that that's a weekly level. We can kind of be a bit more surgical with it in terms of short-term trading levels by extrapolating on the daily time frame. As you'll recall, as this rally was happening, we had this range low as the first trouble area, and then the other side of that range was this range high, and we could even do something like find the mean of that range by going from range low to range high and getting a kind of midpoint level at wherever that is, sort of mid 1800s. I really think and you can see that's where the bounce thus far has come from. So I think for intra-week ETH trading levels, this is what you've got to deal with. Support 1700. Middle of the range, currently support, could become resistance, not entirely clear. The range midpoint generally isn't the best place to trade, but still nonetheless short-term bounce level or pivot at 1860 or thereabouts, and then the range high at 2K. And at the moment, the resistance has done its job. Midpoint's providing a bit of a bounce. Again, very short-term trading type of stuff. If you get your break in market structure at the range midpoint, the way the chart would look is rejection from range high, below range midpoint, and you've got to target the range low at that point as your first bounce area, which again is closer to 1700 or thereabouts. And you can also see it's just got some overlap on the daily time frame, with it being the prior range low and kind of this consolidation before the impulsive leg. So a lot of, if your flash crash by the aggressive dip level is 1700 from a, again, short-term trading point of view, with the larger context being that we are at weekly resistance. Now, what would make this bullish? Well, obviously breaking weekly resistance, as simple as that may sound, would be a good start. But I do think we're entering the type of area where some de-risking is prudent, or we'll see some more profit taking. And I think there are two levels that matter for that. The first, as I mentioned, is this 1800 to 1900 2K round number level. There's a lot of stuff going on there structurally. If we look at our moving average memes, the 21 weeks been tapped to the upside. The 50 is higher. And then the 200-day is sort of also similar-ish in this 2 to 2.2K area. You'll recall that 2.2K is the monthly level of resistance that we also outlined. But the market's sort of getting there, right? Or at least it's certainly reached the first level. I think in terms of upside, the most we could reasonably expect, at least for me, would be a further push through this 2K handle into 2.5K or thereabouts. So I think this is good resistance, but I think 2.5K is like, if you're not managing your longs there, then I don't know, it's sort of irresponsible or very unreasonable. Like if you want to hold through this, because as we'll discuss, you think tech, S&P, NASDAQ, etc., have more upside, I can sympathize with that view, right? But if you want to keep holding that into 2,500 or thereabouts, I think that's a much, much harder claim to make. And especially if we add some extra confluence tools as mentioned. For example, if we measure this entire leg from high to low, so from 3.5K all the way to 1K or thereabouts, going candle body to candle body, and then going for our normie fib, you can see not only is that a weekly and sort of monthly for a wick higher time frame level of resistance, but at that point you've also got the 618 retrace of that entire leg as extra confluence. You've got weekly range low, monthly resistance, and then a kind of good retrace target for that rally. And one other point to make is you'd have to imagine what the market would look like should it get up to 2,500 in a linear fashion, right? So suppose it breaks this resistance at 2K and keeps going. At that point, you'll have 1, 2, 3, 4, 5, 6, 7, 8. I mean, this is just a guess, but what? 8, sort of 7 to 10 green candles vertically from the bottom straight into a high time frame level of resistance. I think just as it made sense to not short the extremity at high time frame support on a strong move like that, it would make the same, at least as much sense, not to long the equivalent with a different color candle, right? So I think that makes sense. So hopefully that's somewhat clear for ETHUSD. As mentioned, we've got short-term trading levels derived from the daily range that the market has re-entered, which are the following. Again, range low / support at 1700, midpoint mid 1800s, range high at around 2K. That's in an area of weekly resistance as well. And I think the furthest the market could reasonably go without some sort of very visible pullback is this 2600 weekly area plus monthly resistance plus retrace, what have you, right? Hopefully that makes sense for ETH. Just zooming out in terms of what would the market, or what would have to happen for this rally to keep going, I think we have to look at tech, right? I think it's easy to get distracted and sort of merge narratives and everything else and argue that this is like completely idiosyncratic ETH strength and nothing else matters. But if we look at tech, this thing has been ripping faces, right? 1, 2, 3, 4 straight green weeks, and that's after, you know, a bit of consolidation, so you could count it as more than that technically. But a face melting rally in the S&P, similar type of move in the Nasdaq, just completely linear, you know, up only, and we've definitely been beneficiaries of that. And I still think it's very much the same macro / tech trade, which is to say that if tech is going to bounce, crypto is going to find a reason to bounce as well, especially when there's a nice narrative on the horizon to complement the price action. But in the same vein, I think if tech's going to pull back or even form a range high or offer some sort of resistance, I didn't at the moment see a clear case to suggest that we'd be immune to that, right? So if tech goes down, I think we go down as well. That doesn't mean new lows necessarily, but I just think if tech pulls back, so will we, right? So then the question becomes, where might we reasonably expect that? And I think we're getting there. Again, to channel my inner Don, I think very much we are both looking at the monthly time frame. You'll recall that we talked about this being monthly support, and therefore the target for buying monthly support is monthly resistance. And we are very close to that area of monthly resistance, which I think is the breakdown point at around 4,300 or thereabouts. If you wanted to be very generous, you could just block out this whole pre-breakdown candle at 43 up to sort of 4,500. But in any case, if this thing is going to have any sort of macro higher low, range high, pullback, whatever it may be, we're very much in the vicinity of it now. There were some weekly areas that could have provided a trap. For example, if this breakout above 4,200 would have failed, that would have been bad. But it seems to me to be very much a case of moving from monthly support, which we've discussed in Technical Roundup, both the channel and the newsletter, into an area of monthly resistance, right? And then, again, this could be the low, right? But at the very least, if resistance is going to do its job, you'd expect some sort of range consolidation structure to form, and that on its own would be enough to get crypto to pull back, right? And I think if you want more confluence, again, just to take out our good old measuring tools, if we take the entire move down from the highest close to the lowest close and overlay our retracement levels, not only do you have a monthly area of resistance at around 43 to 4,400, but in a very similar area, you've got the 618 retrace of the entire rally at 4,400. And again, depends exactly how you want to form this breakdown point, but you can kind of see, just eye test, we're getting there, right? We're sort of getting to an area where on a relative basis, the risk reward of staying long tech isn't terribly attractive, especially as the headlines start to creep into the markets. That's something to be aware of. I don't think there's anything else to add on other timeframes. I think the best explanation or the most compelling one is a move from monthly support to monthly resistance, and we're very much entering that vicinity. Very similar considerations as you'd expect for the Nasdaq. The market moved, I think we had this entire cluster in Technical Roundup as support, and actually traded very well within the cluster boundaries, which gives kind of higher conviction that these levels are good. So if you look at the highest close and lowest close and the lower time frame price action around them, it was very surgical, like bottom tick on the flip. Like, these are very good levels, right? So accordingly, I'm going to pay them as equal respect, if you will, on the monthly time frame. And again, if we just kind of eyeball what a reasonable retracement might be, you can see that 618 lands at around 14.5s or thereabouts, and then I test where that resistance would be structurally. I think you can do anything like just, box out the pre-breakdown block, if you will, and have that. If you want to be conservative, you could just take this pre-breakout candle, which is a bit earlier. But in any case, it's not the exact tick-for-tick levels that matter on this, because we're not trading those levels tick-for-tick. It's more getting larger macro context for the market, because we know it's going to affect crypto. And I think both for the S&P and NASDAQ, over the next couple of weeks, right, kind of at most, if this rally continues, it really starts to enter what I think is reasonable lower high territory, or at least that's my base case. And again, lower high doesn't mean new lows. It just means not this up only price action that has been to the benefit of crypto and markets in general. That's really all I've got. I think the levels are clear. The macro backdrop is also clear. I think it's important not to lose sight kind of what we're benefiting from. The trades at the moment seem to be in sort of meme altcoins. I think the dog coins are doing very well. Dogecoin. Yeah, Doge is up 15%. Sheeb and Doge are playing liquidity tug of war at the same time. I think a lot of the DeFi 1.0 coins have hit resistance and don't look as attractive. I think this is very much the type of environment where if you're going to short-term trade or day trade, you could literally just go on FTX, for example, or Binance or whatever, and go to the biggest gainers over the last 24 hours and or go by which perpetual swaps have the highest 24-hour volume and just trade those very kind of cynically, or at least kind of, probably not new trends, but if you're looking to day trade stuff, go where the volume is, go where the volatility is, and you can pretty easily filter for that just by going on the actual where the futures are listed and seeing who the biggest gainers are and where the highest volumes are, and trade those kind of level to level, day tradey, whatever. I'm sure we could do a separate altcoin live stream to look at levels for these things, but for the moment, it's just very much sort of momentum driven, and the market seems to be enjoying a lack of macro headlines to be scared of. Anyway, that's all from me. I hope this was helpful. Let me know if it was or wasn't. Again, more than happy to do some sort of altcoiny stream chat with you guys overview. So if that sounds interesting, let me know in the comments and we'll get to that. But I just thought it would be nice to do a bigger picture update first before we get messy with these. That's all from me. Thank you for your patience and sticking around the channel during our month off. I think it's our first month off ever. And I say our, I'm not the one with the girlfriend. It's Don traveling the world. So we don't do these often, and we'll be back in September fully fledged. But yeah, enough rambling. Thank you for watching. Like, subscribe, do all the YouTube stuff. Take care and talk to you soon.